welcome back to Infinity Wealth. Dr. Marttand Patel here. So today is the 8th of March. We've had huge things going on in the stock market, but also in the bond market. And what I wanted to talk about in this video is what's happening. If you're looking to refinance your property in the coming months, maybe to hold off. So I'd like to give you, some more data on what's been going on. This week, on Monday, the US Federal Reserve reduced the interest rates by 0.5%, which is dramatic. Now, they are looking to reduce interest rates more. Also, the Bank of England, there is talk in the market that the Bank of England is now looking to reduce interest rates because of the coronavirus and how it's going to affect the overall economy. So, and along combined with Brexit as well. So what I'd like to do and cover in this video is give you more of an insight into what's going on, the things that we should look out for. The other thing that's happening this week is also the budget. So we've got the budget occurring this week. So it's good to understand as property investors how that budget could affect us and what to do during that process. So let's begin. So first of all, if I can give you the 15 points or a few points about the property market in 2020. First of all, we know that the mortgage interest relief will be completely gone by the 2021 tax year. So that's going to affect a lot of landlords in the UK. So that mortgage interest relief, if you're not aware of it, is something where investors have been able to offset their interest payments against their overall income, and that will be changing. So that's been tapered in over the last 3 years. Now we're in the final stages of that. So I implore you to, if you have got properties where you're paying a high amount of interest payments, to maybe discuss it with your accountant and see how they can help you. And there are various organizations. If you get in touch with us, we can put you in touch with them who help landlords to try and overcome some of these new obstacles that the government have put. Okay, the other thing is the fee ban as well, that will be coming in effect, and it's already taken effect as well. So that fee paying ban obviously meant that agencies were now charging us more as landlords to advertise our property and to find new tenants, whereas before a lot of letting agents were charging their own people who or potential tenants a fee for doing that. Obviously they're not able to do that, and those are the charges that they're passing on to us. The other thing that's important in this year as well is Section 21, where we were able to serve as landlords if someone wasn't paying their rent on time, or if we had a problem with a tenant, that we could actually serve them a Section 21 and serve them an eviction notice. Now that is all changing now as well this year. The other thing to look at is local government. What local government are doing is they're introducing licensing schemes. Now, all around the country, I do have a number of properties around the country, and what they are doing is they're in effect introducing selective licensing laws where you have to, if you've got an HMO with 3 or more persons, you're now paying for that fee. So in certain parts of the area in the country, that's quite high. And we're finding that as well. So that's something to be mindful of this year. Also, more importantly, there's also the private residential scheme as well, where if you had your house previously and you were renting it out, a house that you'd lived in previously and you were now renting it out, you could offset some of the capital gains over that time that you own the property. Now, you could offset as much as £40,000 in capital gains when you come to sell that property. Now, that is changing as well from this April. So it means that potentially landlords who wanted to sell up are beginning to sell up and are introducing those properties into the market. Also, the other thing that's been introduced, and I strongly believe in this one, and I think it's right, is the EPC, the minimum energy efficiency of a building, which I think is a great idea. I've always said that that's a great idea. The minimum threshold is a band E, which, having worked in the solar industry, that's quite low. So they'll probably put it up to a band D. At the moment, it's a band D. So most properties must meet an EPC standard or a rating of a band E in order to be able to rent out their properties. Now, that could change as well. The other things that we need to look at is, so we've talked about EPC. The other thing is electrical testing as well. So they've introduced this year, or they're going to be introducing this year, it's introduced last year, was electrical testing. So you have to test your properties every 5 years to make sure that they're safe for your tenants, which is reasonable. Now, in a lot of the HMOs that we own, we've already had to have done electrical testing certificates every 5 years, so we've always maintained that. But it's something that if you are new to property and are not aware of that, these are new regulations that are coming in. The other problem is that letting agents also have to be registered under an ombudsman scheme where they are protecting as landlords. Obviously, if we've got our property rented with or by a letting agent, they're collecting all the fees, so they need to make sure that they are, the money that they're collecting, we will receive. So there is a scheme whereby all letting agents must be registered with an ombudsman scheme to protect landlords and protect those deposits and the rents as well. Rogue Landlords database has also been introduced this year as well. Now, that really hasn't been taken off. The main problem is that the local councils are quite slow. What it will mean is that tenants, if they look at databases, they can complain about their landlords if there's severe damp issues or if they've got issues with the current housing environment that they're in. So that's something that's to be made aware of. But like we promote in this channel, we want you to be good landlords and provide a good quality accommodation for your tenants. Because after all, we are in that service business. And the greater service that we provide, the more benefit that we will receive in the long run, as well as our tenant. So the other thing that could be changing this week and is possibly going to be changing is stamp duty. So we've got on Wednesday coming this week, we've got the new budget coming on. Now, during that new budget, what they were going to be talking about was introducing an extra 3% levy for international buyers who potentially are buying, and most of these international buyers have been buying within London. So it will remain to be seen how that will affect the overall London prices. I do not anticipate huge changes in the price structure overall within London. I think there's other factors that will affect the London property prices, more to do with affordability than anything else. The other thing that we have to look for is the right to rent as well. So as landlords, we've always had to, and most of you who've got agents who look after your properties will be doing the right to rent checks as well, just to make sure that the person who you're renting to is eligible to stay in the UK, work in the UK. Otherwise, obviously, as landlords, we could get fined for putting in tenants into our properties who are not eligible for that. The other thing that's quite important this year is the leases. Now, there is a lease review, and the government basically understood that a lot of freeholders were charging leaseholders a huge amount of money for either maintenance or renewals as well. Now, the government is beginning to introduce new lease restrictions, especially on new houses. So if you are looking to, as a property developer, if you are looking to actually sell on and you've got a block of flats or you've created something as a block of flats, you may not be able to sell that as on leases, but you may have to sell that on as part holder of a freehold. So the government is introducing reducing that, and that is to actually protect leaseholders so that they are, they're not likely to get hit by huge charges from the freeholder. So if you already own leaseholds, properties as flats within London, you may find the benefit of that, because obviously over a period of time you could have the freeholder, before he sells on the potential freehold to anyone else, they have to first offer it to leaseholders. So this will all be changing as well, and the amount that leaseholders can charge for renewing the lease. And this is quite important when you're looking at properties that are short leases. So in understanding that can actually save you a lot of money, and potentially you can reap the rewards of that as well. Property prices. Okay, so what do I see property prices happening in the UK? If we look at the US reducing interest rates by half a basis point, so 0.5%, you would have seen in the UK that if you've been refinancing or trying to refinance your property, and this doesn't go necessarily just for the UK, it goes for anyone around the world, what is happening is that bond yields are dropping. The UK bond yield has hit an all-time low, as has the US bond yield, and many countries around the world as well. The bond yields are dropping substantially. So as business owners and as investors, property investors, what I am finding is that when you come to refinance your property, what you will be offered by the mortgage lender is a better rate. So it's very mindful of the fact that if your mortgage is due for renewal quite soon, it may be better for you to actually hold out for a few months to see if the Bank of England reduces bank interest rates, then to actually lock in that lower rate. It will also affect you if you're a Section 24, where mortgage relief has been reduced. Like I said at the beginning, now obviously the more that we reduce our interest payments, the less we'll be paying on the mortgage interest relief tapering that goes on. So it's being very mindful of that. So as far as interest rates are concerned, in the UK, the financial markets have actually, and especially in the US, have tapered in 100% chance of another 50 basis point rate cut in the US, and we have also tapered in, or a higher probability now, that we will also be reducing interest rates in the UK. And that's all due to the slowing, or the coronavirus, and the slowing economies, and the worry that people have at the moment. And at the moment it is a worry, because we don't know. The markets are always always go down on uncertainty. When certainty is known, they will rise, and that's also the same for property markets as well. So with that uncertainty, it will reduce interest rates. So if you are looking as an investor to refinance or renew your mortgages and it's not due yet, it may be worthwhile waiting and then doing a renewal on that, because you will find the benefits of that with lower interest rates. So to give you an example, we have two properties this year which are refinancing, and we're holding off on those at the moment to see what interest rates are going to be doing. In which case, if they are going to fall, we will receive the benefits. I think some of you, the bond yields have been dropping for the last year, but they've escalated in the last week and 2 weeks because of the stock market, basically. Okay, so other things that you have to be aware of is some of the rules that are changing in the property market, and it is to be mindful of that. So in this particular video, what I wanted to try and convey to you is not to panic. The property is a long-term game, and with lower bond yields, if you can imagine, if you had, let's say hypothetically, £100,000 in the bank account, with bond yields dropping, it will mean that the interest payments that you can receive on your £100,000 is a lot less. Now, if you were now able to actually invest that money into property where you get a higher yield and a higher rate of return, this will support asset prices. This is the main reason why prices and interest rates have been, well, not prices, but interest rates have been dropping. So governments around the world are trying to shore up asset prices, and mainly that shoring up is in the stock market, but it affects us in the property market, because at the end of the day, if you looked at house builders' share prices when the US Federal Reserve decided to cut by half a basis point, you'd have seen them shoot up through the roof. Now, that gives you an indication of confidence that people will be able to maintain their mortgage payments as well, and it infuses more injection and liquidity into the property market, so that homeowners, even if you are not a landlord, it will help you, because now your mortgage payments will be reduced if you're not on a fixed rate. If you are on a fixed rate and it's coming to an end, then just wait. You might find more bargains coming in interest payments as well. Right, so that is what I wanted to say for this week. Now I'll be doing another video after the budget to give you what the budget has said, and seeing what it's brought for us as landlords. So I hope you've enjoyed the video. Once again, please subscribe to our channel. There's something in below, and also hit the notification bell as well. So every time we upload a video, you will receive a notification that we've uploaded the video. Constantly, what we're trying to do is keep you abreast of what is going on in the property market and how you can take advantage of it, and how you can also protect yourself from it. So it's goodbye from me right now, and I hope to speak to you in a week's time to give you the latest update on what's been going on in the budget. Okay, thank you guys, take care, and speak to you soon. Bye.